Hello and welcome to the second edition of our special program, Income Declaration Scheme 2016 or IDS. Income Declaration Scheme is certainly the most talked about and advertised income disclosure scheme of our times. The Government of India is using every possible medium to promote the scheme. So much so that if you are flying with an airline and if you look at the flip side of your boarding pass, you will see the advertisement of IDS. Since the scheme has been launched, several FAQs have been issued in the form of CBDT circulars, which shows that several queries are flowing in from the industry. Does it also mean that several people are participating in the scheme? Maybe yes. In the last episode, our experts analyzed several aspects of the schemes, but since then, more circulars have come in. So in this episode, we are going to take up those circulars and also address the specific practical complications a prospective declarant may face before making up his mind to avail the scheme. But remember, 30th September 2016 remains the deadline of the scheme. So whatever has to be done in the next few days. Now we quickly turn to our panelist, Mr. Ajay Vora. He's a seasoned taxation lawyer and designate senior advocate. Then we have Mr. Sunil Chopra, he is the former Chief Commissioner of Income Tax. Then we have Mr. Rohit Jain, partner, Vaish Associates Advocates. And then finally we have Mr. Rupesh Jain, partner, Vaish Associates Advocates. Let me begin with you, Mr. Rupesh Jain. There has been some recent clarification with the CBDT about the period of holding of an asset. So what exactly is that clarification, and is it going to help the declarants?
Absolutely, it would. I will explain how. So CBDT had come out with a circular earlier in relation to the scheme that where you declare any asset under the scheme, then you have to take into consideration the fair market value as on 1/6/2016 of that asset.
Okay.
And thereafter it was clarified that indexation would be available in relation to that asset from 1/6/2016, and also the period of holding would be counted from that date.
Okay.
And that was relevant in relation to subsequent sale of that asset. So if you were to sell that asset in a later date, so the period of holding would be counted from 1/6/2016. So to give you an example, if there was, let's say, land which you had acquired in 2011 and you declare it on 1/6/2016 and you were to sell that land, let's say within a period of 1 year, then since land has been held for less than 3 years, if you count it from 1/6/2016, it would result in short-term gain, not long-term
capital gain. Correct.
But if you were to take into consideration the date of original acquisition, which was sometime in 2011, then the land has been held for more than 3 years, and
Correct.
it would result in long-term capital gains.
Correct.
So this was resulting in certain disadvantage because the land has been held actually for more than 3 years, but the capital gains, the nature of capital gains would be short-term. In illustration which I
it would have kind of caused hardship.
Yeah, hardship. So to alleviate that, and it has been reconsidered by the board, they have reconsidered the earlier circular and they have revised the earlier circular to say that the period of holding would be taken from the date of acquisition, the original date of acquisition, not from 1/6/2016. So this would result in relief to the taxpayers, and they would now be able to characterize an asset as a long term, where it has been held for more than 3 years or more than 1 year, as the case may be, depending upon the nature of the asset.
Okay.
So this is a welcome relief and circular which the board has come out with.
Okay. Mr. Rohit Jain, in the last episode, you discussed about the rate of silver and gold being lower as on 1st June 2016. Do you think this will result in the benefit to the declarants, and what exactly is this? Can you elaborate on this point?
But basically, I mentioned last time was I analyzed the rates of the silver and the gold over a last period of time. So what I noticed was in some time the rate of the silver went up to 56,000, and the rate which is required to be disclosed is 1/6/2016, which is approximately some 36,900 or something, which is notified by the CBDT also. So what I was pointing out was that if you were to declare, if you were to pay the tax on the fair market value as on 1/6/2016, your effective tax rate was in fact lower. Subsequently, what we did was, in fact, we did a lot of working to determine what is actually the effective rate of tax. So there may be various kinds of declarants who may be possessing various kinds of precious stones and diamonds and jewelry, etc. What the suggestion would be, so they come out and declare those precious diamonds, and what they will notice is if they were to hold those assets for considerable period of time, or maybe 1 or 2 years also, the effective tax rate under the scheme itself is somewhere around 35%. In fact, it comes down to lower than 36% also in certain situations, depending upon the nature. So one actually is not realizing that the effective tax rate under the scheme itself is in fact much lower than 45%, as is envisaged by the normal taxpayer.
Normal taxpayer.
And considering the fact that you don't have to pay wealth tax under the scheme and the declaration is treated as final. So overall, considering all these circumstances.
So in other words, they should come forward and avail the scheme.
Yeah.
So your views on this?
I think what Rohit has said is effectively the tax rate can come down to 45% if you disclose, let us say, bullion, silver, precious stones and so on, and you are to hold them for a couple of years and then sell them. Now what is important is that if I disclose today that I am in possession of diamonds and I pay the tax under this particular scheme, tomorrow if I go to sell, the tax department should not be in a position to dispute that you never possessed the diamond. That declaration and the acceptance of the declaration by government should be ample proof that I own the diamonds as on the declaration date. So therefore I think that is important, because we've seen in the context of IDS 97 that some disputes arose when people disclosed jewelry and paid tax under the IDS 97. On the subsequent sale, there have been issues that have been raised by the tax department. So I think that's a question.
That was a valuation fraud which was done.
I think that's a question of trust that will be required, so that people can come forward and disclose precious stone, jewelry, silver, and so on.
Sir, now, please share the revenue perspective. And my specific question is that government has launched a program called Project inSight. Now, they're collecting data from several agencies. And so, do you think this program can actually create a real deterrent effect to make the declarants forthcoming and avail the scheme? Because it is not the lack of data availability, but more of data mining, which actually eventually reduces the actual deterrent effect. So what are your views on this, sir?
The very purpose of this program, Project inSight, is to have effective mining of the data. Data we have in plenty for several years, but the mining was not adequate, was missing. So with the Project inSight, they are going to roll out the first phase in the month of May 2017. Whatever deficiencies were there earlier in mining of the data, they are meant to be overcome. They will have a centralized platform, and the data which we have in plenty with regard to the taxpayers, would be made available to the right quarters, like the concerned assessing officers and his superiors. So, and that data, since it is there for in the possession of the department for a very long time. So the entire data, once the first phase rolls out in May 17, and then the other two phases are being rolled out 10 months thereafter, with a gap of 10 months each, the entire information would be in, our officers in the income tax department would be able to utilize it. And once we have the information, whether it pertains to 2010-11 or 11-12, that would be available. So it is in the interest of the people to disclose it now, rather than once the scheme under the Project inSight.
So once the data gets processed and get mined.
No, data gets processed. Once the data is processed and it's available to the income tax department, and they are making the platform very comprehensive, and whatever loose ends were there, they're going to tighten those. So if the data gets comes to in the knowledge of the income tax department, the right quarters, in May 2017, once the first phase rollout comes, and it will not be for 2016-17, it will be for several years also.
Correct.
So it is in the interest of the taxpayers to come clean now, because by in May 2017 they will not have the benefit of the income disclosure scheme.
So you're saying maybe the real deterrent effect lies in the future, but this is the opportunity to avail the scheme.
That future is a very certain future. There is no ambiguity about it.
That.
This Project inSight, the work has been going on for some time now, and they have set deadlines. As I said, May 17 is the first rollout, and then 10 months after that, the second, and the 10 months after that, the third one. So the entire information whatever deficiencies they had now would be available. So mining of data would be proper and adequate.
The issue that is arising from what Mr. Chopra says is this veiled warning that the government is giving time and again, that we are sitting on pile of information, is actually not an empty threat.
Yes.
It will crystallize into reality very soon.
Very soon. Rohijan, there is a very contentious issue going on about the penny stock. So, can you just, and for the benefit of our audience, what exactly is the issue and what is the correct mode and manner of declaration of the penny stock?
Now, in case of basically penny stocks are those stocks which the SEBI has identified as the stocks wherein there was there was some movement of prices, and there were certain beneficiaries who have actually received the amounts in the form of capital gains, which they have declared in the income tax return, but they have claimed exemption under the provisions of the Act as the capital gains which is exempt under the Act. Now that information, as sir is also pointing out, that information is available in the, because these are all PAN based information. So all PAN based transactions, the information is available with the department. Now the view amongst the department officials is that the gain which has been surrendered, which has been offered for tax, on which exemption has been claimed, is actually an unreal gain. This is the persons have laundered their own money in the form of capital gains,
and
which have come back in their
system.
books of accounts. Now there can be two types of situations. One, the person is a genuine investor who has invested, who has actually realized this gain, but he doesn't want to get into litigation. So in that situation, the correct mode and manner of declaring under the IDS would be the year in which he actually received the capital gains. That would be the one category of situation. The second category of situation is where the person has actually laundered his money and brought it back in the form of the capital gains. In that situation, probably the correct course would be to declare it in the year prior to the year in which that gain actually was received in the form from the person to whom the shares have been sold. And in fact, if you see the recent clarification which they have come out with in August 2016, wherein they have said that if you were to declare an income in an earlier year, and that income can be linked with a transaction happening in a subsequent year, in that situation the benefit will be given to the taxpayer. So depending upon the facts and circumstances, the person, instead of declaring it in the year in which he has actually received, where is he admitting that it is my own money which has come back in the form of the capital gain, he may declare it in the earlier years, provided proper disclosures are given in the return form.
So as a seasoned litigating lawyer, so do you think, I mean, what's your view on the tenability of this proposition made by Mr. Rohijan?
Basically, I think if you disclose it in a year prior to the year in which you've actually surrendered the capital gain, what will be important will be the burden on the taxpayer to establish the nexus. That this income which I have disclosed in year 1 actually produced or was laundered to earn the income disclosed as capital gains in year 2, which has been claimed as exempt from tax. So the tax department, I would presume, would put the burden on you to establish that the disclosure that you made actually accounts for the capital gain which you claimed exempt in a subsequent year. So I think there has to be that trust on both sides in order that this does not get into litigation. And people can come forward to make this disclosure basis this FAQ that has recently been issued. And just if I take 2 minutes more, on this issue of share capital also, the government has raised a pointed question in the FAQs that people who are sitting on factitious loan entry, share capital, etc. can also come forward. Now, this is a fact that everybody is aware, and it's in the public domain, that a lot of money has been laundered through the, we call it the, what should we call it, the markets in Calcutta, where share capital formation is a known incidence. Now, there people have received share capital, which is actually nothing but their own undisclosed income laundered through the form of a maze of companies. Now that, I think the government is nudging those kind of people to make a declaration, to say that if you have disclosed share capital which you know is actually undisclosed income, you can come forward and disclose.
In fact, if you see, there is a silent, the first answer to the first question in the recent circular is, they have clarified that in case of fictitious liability which sir is pointing out in the form of share capital, etc., in case it is appearing in the balance sheet, and there is on the right hand side, obviously there will be many assets which will be represented by those liabilities. They have even gone to the extent of saying that you only disclose the value of those liability rather than declaring the fair market value where there is no one-to-one link between
the two.
the liabilities and the assets.
Correct.
So in fact, that's according to us maybe an important concession which the department has given, because you don't have to fair market value those assets, which may be much more than the amount you may have originally received.
But then an issue which might arise is that the department may say tomorrow that how do you explain these assets which are appearing, and why it should not be that they should also be valued, and there's a double whammy. So you pay the tax on the loan amount which is unexplained, and also on top of it on the assets,
I think that nexus will have to be established.
So nexus, it is very important that you are able to establish the nexus.
Yes.
And then the circular also says that in case there is a nexus, then you have to only disclose the value of the asset. And then only if there is no nexus that you can declare the loan amount. So, but then, as I said, the double whammy would be that tomorrow department will turn around and say that since you have not established the nexus, so you also, declare the assets.
And therefore, it is more important that form should be filled up very carefully.
Yes.
And that linking has to be established through the form. That's the starting point, which people have to be very careful while filling.
The next question to you is that earlier the circulars clarified that you can rectify your declaration, but it has to be an upward revision. Now they have also come with a circular that it can be a downward revision also.
Right.
So what is that? Could you please elaborate on that?
Yes, you see, this has been necessitated by the fact that there are certain clarifications which have come now, which are to the advantage of the taxpayer. So first one which we talked about was a situation where the period of holding was to be considered with reference to the original date and not from 1/6/2016. That is one. The other is that rules have been amended to say that in relation to immutable property, where the value, you can take the value as per the registered sale deed, and that the fair market value of that property would be with reference to the cost inflation index. So you can compute the fair market value with reference to the cost inflation index which was there in the year in which the property was bought, which is demonstrated by the registered sale deed, and you take the cost inflation index of today and you arrive at the fair market value. So you don't have to take the market value as such. So the fair market value will be arrived at as per this formula. So there could be many situations on immutable property where this formula may work to your advantage, because the fair market value may be much more, or the market value may be much more as compared to the value you will arrive at with reference to this formula, where you index it with reference to the cost inflation index. So now there could be situations where declarations may have been filed by certain persons taking the immutable property value with reference to the market value and not with reference to the cost inflation index. So if you do the working with reference to cost inflation index, it is probable that the fair market value as on 1/6/2016 may be lesser than the market value. So there would then, there's a reduction in the tax liability. So to give those declarants, the opportunity to revise their declaration downward, that this clarification has come. So it has
got to also be due to the reason because the huge amount of black money which is stashed in the real estate sector just to promote so that they come and avail the scheme.
Absolutely. You see, because government does not lose for the simple reason that when the asset is sold later on, capital gain would be taxed in any case to the extent of differential. So I think this will encourage more and more people to come forward, because the notional value of the asset which they have to now declare and pay tax on, there is a possibility that it is lesser than what it would have been if you were to take the market value into consideration.
And I think just to add to, you see, you are asking in another scheme as it originally stood, you are asking people to pay tax at 45% on the fair market value as on 1/6/2016. Now many people feel this is not realized money, it's not money in your pocket on which you pay 45%, you are actually paying something on a hypothetical value which you may never sell. So you may never be able to encash that kind of gain. So this I think is a welcome step to reducing the value on which you have actually to pay the 45%.
Correct. So what's your way on this scheme? That do you think this scheme stands on a better pedestal than the last scheme that we had in India? Have we learned from our mistakes and deficiencies which we have corrected in this scheme? Do you think so, sir?
Definitely so, because the last VDIS of 1997 suffered from certain deficiencies which were pointed out both in the report of the C&AG, and there was a lot of criticism against those schemes. So the two features of the present scheme, they overcome those deficiencies. One, the rate of tax is more than the maximum marginal rate of 30%. Now the rate of tax including surcharge and penalty is 45%. So that takes care of
So
one
the
part
discrimination
of this.
between the...
Yeah. And the second part is that they have linked the amount to be disclosed, amount value of that, to 1/6/2016. In the earlier scheme of IDS 1997, there were lots of allegations that people had given the value as of 1987, that is 10 years before the advent of the scheme, and they paid just about 15% of tax as against 30% of the tax that was liable under that scheme. So both these deficiencies have been overcome in this scheme.
Okay. Mr. Rohijan, a lot of news is coming out, the searches and surveys going on. So do you think these category of SSCs are also eligible to participate in the scheme?
Now we'll have to make distinction between two categories. One is a category of survey, other is the category of search. Now in case of survey, what happens is the year of survey is subjected to compulsory scrutiny. Whereas in case of a search, once the search takes place, there is a mandatory provision for requiring the assessing officer to reopen your last 6 assessment years and also the year of search. So therefore, in the case of survey, what they have clarified is that year of survey, you cannot make a declaration under the scheme, but you can obviously come under the go forward and make a declaration with regard to the earlier years which are not covered by the survey. Secondly, in case of a search, once a search takes place, since the earlier 6 years are also to be reopened, so there is a clear prohibition that earlier 6 years also cannot be covered within the declaration. Now the larger issue in fact which arises over here is these searches and surveys are taking place in fact after the launch of the scheme, which is 1/6/2016.
Correct.
And therefore in that context the larger question which arises is whether those SSCs in whose cases the searches are taking place during after the launch of the scheme, are they eligible for making a declaration or not. In that context, if we see the provisions of the scheme itself, there are 3 clauses. The first clause refers to the cases where the notices have already been issued of a scrutiny notice. There, the language is identical to the clause 2 which refers to search and survey. It says where the notice has been issued. And in that context, the CBDT has clarified that those will cover only cases where notices have already been issued as well as served by 31st May 2016. Effectively meaning that in a case where a notice is received after 1/6/2016, you can file a declaration despite the fact that assessment year is under scrutiny. Now drawing same analogy in the case of search and surveys also, according to me, even those cases will get, those persons where surveys and searches are taking place after 1/6/2016 should be able to make a, come forward and make a declaration of the year of survey as well as the last 6 years, and those will not be, fall under the category of prohibited categories as defined under the scheme. So that is in fact, and otherwise there makes no sense why during the pendency of the scheme searches and surveys are being conducted.
Correct.
So according to me, those assessees are eligible, though in most cases searches and surveys are taking place after 1/6/2016.
So what, do you agree with what Mr. Chairman
I think
has to say?
on a literal interpretation of the language of the scheme,
It is allowed.
I think I would tend to agree with Rohit that searches after 31st May 2016 should not actually debar the person searched from making that declaration. And this is, I think, also supported by the fact that these searches have intensified after 31st May in order to nudge the person searched to actually come and make a disclosure. But the lawyer in me, and if I be the devil's advocate, tells me that then should you make a distinction or should you discriminate against people who have been searched prior to 31st May and say, look, you are barred, but somebody who has the good fortune of being searched
after the starting of the scheme,
he can avail the scheme willingly and welcome. He would be welcome to make a declaration under the scheme. I think, given the intent that is to popularize the scheme, make it more attractive, let people come forward and make a disclosure, I would lean in favor of the interpretation to say that you should restrict it only to people who have been searched prior to 31st May 2016. And in the last program, I had made a pitch that I see no reason why you should actually be keeping out those persons who have searched before 31st May 2016, given the fact that you are actually wanting money to come into the mainstream.
And then we are putting so many restrictions.
Somebody who has been searched, you make an assessment for 6 years, it goes up in appeal, it serves no purpose getting into this unnecessary litigation. If you give him that opportunity to come forward and make a disclosure under the scheme, pay tax at 40% and be done with. You not only save him the trouble, you are saving the trouble to the tax department.
Correct.
Of making an assessment, defending the assessment in appeal.
So much
and
of cost
so on.
involved in that.
And you have money upfront. You will get money today rather than money after a long drawn litigation.
But unfortunately, that has not been
That has not happened. That has not happened. I think the government should see reason and make it open.
That will involve amendment of law.
That will amend.
So now, since we are left with very limited time, your closing remarks on the scheme. How do you see, the scheme and the way ahead?
I personally think that people should avail of this scheme because, as I had just said a few minutes ago, that a lot of data about the taxpayers' activities is available with the income tax department. Until the deficiency in the mining of that data, that is being overcome. And once it comes to the notice of the right people in the department, there is no way to escape its consequences. So it's better that now this window has been given.
Correct.
It should be made use of.
So closing remarks, sir.
I would think that, you've heard the old English adage, no use crying over spilt milk.
Correct.
Now, given the fact that, as Mr. Chopra said, and I think that's a reality, that the government has substantial amount of data, which is being mined now logically, rationally, and which will throw up a lot of information about income which is not part of the mainstream, which has not been disclosed by an assessor. Now, you can certainly expect notices to be coming forward in the near future. This will be an opportunity lost if you don't make use of the IDS scheme, which is open only till 30th September. And I think you have to weigh the 45% tax. Most people are sitting today on the fence, thinking that if the rates come down, we will willingly make a surrender. I would think that you need to weigh this 45% with not just the amount of tax of 30% levy today, but
against the cost,
factor in the interest, factor in the penalty, factor in the prosecution.
The future prosecution.
Now, yes, so if all that is compounded and if all that is aggregated, the cost will be much more. And of course, what is intangible is the peace of mind.
Peace of mind.
So that if you add all of it, I would think the scheme is attractive, even at 45%.
Okay.
And also the huge litigation cost nowadays.
Yeah, the litigation cost. The litigation cost.
And that is why they have come out with that, this is a time bomb. Actually, black money is a time bomb. It can, blast any point of time.
Right.
So
It is ticking.
Correct.
It is ticking.
So as we have heard our panelists, and we must also understand that whether it is the success of income declaration scheme under Income Tax Act or any other amnesty scheme under any other, for example, it's a competition law, the success of that scheme is directly linked to the quantum of deterrent effect. Our experts believe that in this case, there is a real deterrent effect. So the taxpayers should take the opportunity of this scheme and not wait for the taxman to come knocking at their doors. However, this is also a fact that income declaration scheme cannot be substitute for a good, robust tax compliance regime. So while we wish success to IDS, we also hope that this remains a last such kind of scheme in times to come. Thank you for watching.